Hello everyone, this is Blaine Pearson, and today we're going to review Building Financial Statements with Excel Part 3. Part 3 of this video series includes creating the ratio, credit, and housing, and calculations page. If you have watched Parts 1 and Parts 2 of the Excel series, we started a brand new Excel document, created a data entry page, created a balance sheet page, and created a cash flow statement. With these three pages, we can then create a ratio, a credit and housing, and calculations page. The ratio page will tell us the client's current financial position and compare them to the benchmark. Here I have separated out the ratio for the emergency fund, including the life insurance proceeds and not including the life insurance proceeds. What you'll do is you'll list all the ratios given to you in class. You'll then use the Excel document to link the data and create the ratios. You'll do this for liquidity, you'll do this for saving, debt, housing, investment, and taxes. This will be helpful for when you comment on their current financial position in your student write-up. You can compare where they currently are and where the benchmark is and create some suggestions on how they can improve their financial position. The next page will deal with the credit and housing page. You can first start by doing the emergency fund calculation and see, based on what they need, whether it's 3 months or 6 months, what they already have, what they need to save to get there, and the monthly savings required to get there. On this side, I've done the same thing, including interest earned, assuming a 1% interest rate. As you can tell, the payments are not much different. The next part, you'll do the same thing for their retirement goal. You'll take what they currently want, which is $3 million to retire on, what they have, and you'll use your TVM calculations to come up with the required monthly savings. You'll also be required to analyze any other goals they may have. For this particular client, they're interested in a new truck, so we've calculated the monthly payment for that truck. We've also noticed that the clients would like a second home. So we've calculated the front end cost and the ongoing expenses. We've also looked at refinancing their current home. Once we have all of their goals inputted and analyzed using our time value of money calculations, which are available in the other video sections if you have questions on them, we can analyze and see if the clients are on track for their goals or if some goals just may not be possible. For example, the second home in Frisco will cost them $49,000 extra a year in ongoing expenses. However, when we refer back to the cash flow statement, they only have $8,000 of unidentified cash flow. So we'll need to use this information to optimize their goals to see if they can afford all of their goals, or to see if they are maybe oversaving in areas such as retirement goals and can allocate that money to the Frisco home. The last page I keep as a calculations page. Again, if you have questions on time value of money calculations, please review the other available personal financial planning TVM videos. So this page includes items such as mortgage, car, four-wheeler, and their tax calculations. One useful item is using this page to calculate things such as their mortgage payment. In this particular case, I knew that they had a mortgage, that they had value of their payment to get the monthly payment amount that they're paying. I then use this number as my name manager link in my cash flow statement. Now, of course, this is an annualized amount. And from here, I can create other questions and calculations, provide solutions in the balance sheet and the cash flow statement.